What's going on, guys? It's Killer back with a massive Bitcoin market update. Now, it's been a while since I've posted on the channel, and the reason why is because I've been quite busy, right? And I think the way I'm going to continue posting on this channel is I'm going to keep it strictly based on the higher time frame. I'm going to be covering my higher time frame predictions, my thesis, my thought process. And the reason why is because on X, I'm posting regularly 10 times a day, and it's kind of difficult to see my predictions get lost in my entire thesis. Whereas on YouTube, if I strictly post a couple of times a month, you'll see my entire thought process, my analogy, what I'm expecting, the areas I'm paying attention towards, and you can always revisit the videos, right? Because I'm not going to have frequent updates every single week, more or less maybe once or twice a month. So that's what I'm going to do on this channel. So if we briefly cover what I went over in the past two videos, I was pretty much suggesting that this area is going to get tested because we have untested lows around this price region from a candle range theory perspective. And when we were at this 115 to 120k region, I was saying, look, I'm going to scale out of my long-term bags. The reason why is because I see the market overheated. I see this more of a distribution pattern rather than reaccumulation. And obviously we can see, well, this is 100% correct. Now, if we are going to objectively view market structure here, we can see here we've had a trend line shift, lower time frame. We had a push through, liquidation wick, retest, push straight down to the lows again. Now, if we start looking at the monthly time frame here and looking on the bigger time frame, we can see we are testing around that yearly open region. However, the areas which I'm paying attention towards for a possible bounce zone is going to be around these wick lows here, which if we get a box and mark this area, it's going to be between that 90k region, that 92, 93k, all the way down to that 88k region. So pretty much I would be marking around this box here where we have this FVG and imbalance on this previous initial impulse where obviously price action skipped, we pushed through and so forth. Because as of now, this entire rally here, we've been respecting a lot of these FVGs and these fair value gaps, and we can see, well, for the most part, most of them haven't been getting filled, right? So, what am I looking at? First and foremost, I'm looking at this area here, around this previous wick low here. I'm looking for another sweep into this area. Now, if price manages to get into this price region, I think we are going to continue to have some form of a range, but it's not going to be this upper range. You can see here, market's always ranging. The previous range, we had 90 to 108. The next range, we had 108 all the way to around that 123, 124k region. Now we have broken the structural significance of this area here, right? So we've seen a shift in trend, right? We're going to be viewing the market objectively, no particular bias. We're going to be just viewing it from a technical standpoint only. We can see there's been a shift in trend. That's without question. So it makes sense to trade the trend, right? When we're in an uptrend, obviously you look for higher highs, higher lows, you trade the trend. When we are in a downtrend, you look for retraces towards the upside, lower high formations, and then you trade the downtrend. But because people have been so used to this up only for 3 years, well, guess what? Most of them are going to end up as exit liquidity, add to their longs, try catch the dip, and eventually we can have this broader market correction, which 90% of people are going to get caught on just because of directional bias of how the trend has been reacting for the past 2.5 years, right? So, first and foremost, I'm looking for a bounce around this price region all the way up to around this 98, 99k region. If we're looking locally, now we start looking here, I want to see us test around this price region here, around that 98, 99k region. And if we start looking at the daily here, this is our previous lows here. Now, do I think we're going to reject this first try? I do think we will get a rejection here. However, I want to see some deviation above the 100k region to just attract more liquidity. Because if we start getting all the way to the upside after testing these lower regions around here, if we start getting to here, this is going to attract liquidity. Everyone is going to be like, oh my God, we're back. Time for new highs. And obviously, even though the trend is still bearish, people are going to get bullish around this price region, and we're just going to naturally push towards the downside if we reject this price region. So as of now, because the structure is bearish, we are going to trade the structure. So as of now, we can see lows broke, retest, lows broke, retest, deviation, and we can see the same thing around this price region here. So if price pushes up from this 94k region and tests around this 99 to 100k or even that 98k region around these previous lows here, if we reject, accept back into range after deviation, we look for a lower high to a push down to these lows here. Now, I'm not long at the moment. And the reason why is because, like I said, I'm looking for this area to be filled around this price region, which matches up with these previous lows here, which is a strong area in my opinion. Now, once we get down to this price region, I think we're going to range similar to what we've done previously, right? Where we had the 98 to 108, we had the 108 to 124. I think we're going to range between the 88 to 100K region for the next couple of weeks or months. I think we'll see something like this develop where we have this movement like this because the market has been moving in a wick off schematic, right? We have our distribution, our reaccumulation, our expansion, our distribution, our push down. Now, the reason why I believe the market's going to continue to range within this price region and not see a massive correction is purely because market makers' objective is to attract as much liquidity as possible and distribute as much as possible. If we start going down in just a straight line, this doesn't give them much time to redistribute their bags. So this is why we have these different phases. We had our distribution, we had our mark downwards. When we start getting to this region, we are looking for this redistribution. And if we are going to confirmation or if we're going to have confirmation going to the downside, then obviously this low is going to snap. If we start pushing upwards and seeing the structure shift, obviously, then this is not going to be redistribution. It's going to be reaccumulation into expansion, which would go against the 4 year cycle. So this is not really what I'm looking at. But as a trader, you need to observe things from an objective standpoint. So this is a scenario, but it's not a likely scenario in my opinion. So this is why I'm expecting locally here. I think we'll get a sweep into these lows here. This is the area where a lot of people are going to capitulate and start calling for a bear market. I know a lot of people are bearish here, but I do think we are going to range. I do not think we're going to have any massive downside movements just yet because we are down 26, 27% from the high. So once we start getting to this price region on this lower band, what are we going to do? We're going to trade the range until it breaks. As you can see, of previous ranges, you could have shorted and longed multiple times before getting stopped out on the break. Same thing around this price region. You could have shorted and longed the lows multiple times before they break. So we will continue to take trades around these range lows when we start testing this area, and then we'll start taking trades at the highs again. Now, like I said, if we start moving all the way over to the quarterly chart, which is something I brought up in the last update here, we can see, well, we have broken below this key area here. And the reason why this was a key area, well, matter of fact, let's mark it a little bit better here. The reason why this was a key area is because we had three wicks to the upside, which tested this region. We had our wick up. This looks more of a blow off the top. And the reason's quite simple because we had our push through, we had our rejection, we filled the FEG imbalance, swept the lows, pushed through. Next candle opens, we have somewhat of a shooting star candle closes. We push through, sweep the highs, and we can see massive correction here. So based on a quarterly perspective here, this looks rather bearish than bullish, right? And like I said, it's quite simple because any chart here, if this closes below, because of how bearish this candle is going to be, do you know what's going to happen? Market makers are going to push the price upwards. Why? It's because bigger players and institutional players are going to be looking at a certain candle on the weekly, the quarterlies, the monthlies, and the yearlies, and they're going to be observing the narrative. So if a candle closes significantly bearish, naturally the market's going to be bearish. So at the start, they will start pushing the candle towards the upside of the new candle, taking out them shorts, and then we can reverse to the downside if the trend remains bearish, right? Like I said, there are the bullish scenarios, but it's not something I'm particularly looking at the moment. I trade the trend. And obviously, when we were at these highs here, I was countering the trend, but that was because I had external confluences, right? I had confluences which I'd been looking at for many years, and that's the reason why, when we were at this price region, I was countering the trend because I was expecting a breakdown. Now, if we start looking at a trend line as well, which is around this price region, here we can see we've seen a significant shift in trend as well here. Now, this could just be deviation below the trend line. We have seen this quite a few times in the past where we have deviation, little acceptance, push through, and we do something like this. This is definitely possible. And that is the validation of a bearish retest, right? What you need to understand here is theoretically, based on purely just market structure, we can literally go all the way up to this price region here and still be bearish. So that's why I'm saying If we start getting to these lows and testing these lows, we can range around this price region for quite some time, just like seen in the past, and then we can have the correction. That's why I wouldn't be mega bearish here. I'd be looking for structural confirmation of holding the lows, looking for them retests, and then obviously validating them retests through the higher time frame market structure. So hopefully this update has helped. This is my entire thesis at the moment, and I think we'll range before having a significant break towards the downside if we are going into a bear market. Of course, I did post my shorts at 123k, and I have been leaning on the bearish side. Pretty much, I've been shorting every single retest here. Took a long here, nothing crazy, but other than that, majority of the trades which I have been taking have been on the short side because of the market structure. But I'm going to be easing off the shorts as of now because, like I said, I'm expecting a range to form, and in this range, it's going to be quite profitable as long as you know where to enter. So that is what I'm looking at the moment. Hopefully that helps, and I'll catch you guys later.